Hello, good morning, ladies and gentlemen. How are we all doing today? And I hope we are pumped up and ready for the New York session today. So let's do some quick confirmation. Let's confirm that you can see my screen and you can hear my voice by typing hi in the comment section. I would like to see some feedback, please. Let me see some feedback, please. If you can see my screen and you can hear my voice, please type in hi in the comment section so that we can get this started. Okay, so what do we have here? Good morning, Valeric. Hi 117, good morning to you. Thank you very much for that confirmation. Josie 2298, good morning to you. Thank you. Hey Carrie, how are you doing, Carrie? Good morning to you too. Okay, so with this couple of responses, I would like to take this as a confirmation that we are good to go this morning. Okay, I can see Jankra Sentis. Good morning, Jankra Sentis. All right, so I'm so excited to welcome you all to yet another promising session on the Extra Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we are going to be diving right into the market structure together, looking at it from a technical standpoint to identify a potential trading opportunity ahead of the New York session today. And for those who are joining us for the first time, you are highly welcome on board, as what we simply do here is to prepare ourselves ahead of the New York session by looking at and reviewing the instruments that we have chosen at the beginning of the week. So for this week, we have 5 financial instruments that we are looking at: the USOil, the US Tech 100, GBPUSD, XAUUSD, and the USDJPY. So we are going to be looking at this, how we are going to be managing our existing position and how we want to take a position ahead of the New York session. It might look a little bit overwhelming at first, but I assure you that with time you get to understand how this works and you will be able to make your own individual decision using the information you have gathered here. So once again, you are welcome on board, and at this point we shall be diving right into the business for today. And as usual, you know what we do. We want to keep tabs with the fundamentals. We want to see what is going on from the fundamental aspect of the market as we prepare for the week. So we are going to be looking at the economic calendar this morning. So I hope you can see my screen clearly. So I had to zoom this out a little bit. I got some complaints earlier. And yesterday we were looking forward to the ISM manufacturing PMI. This was an index that gives us an insight into the business condition in the US manufacturing sector. And we had a consensus of 46.6, but the actual data came in beyond expectation at 47.1, giving us a whopping 1.30 positive variance in that regard. Then today's 2nd of May, Tuesday, we do not have any high impact event affecting any of the instruments that we are monitoring today. So we are going to be skipping this economic calendar for today, and we shall be using our technical structures to identify potential trading opportunities. But I would like to state here that there is a handful of high impact events coming up tomorrow, especially the FOMC, as we are expecting the Fed Reserve to do its rate decision announcement tomorrow, which everyone in the market has been looking forward to. And obviously we have been seeing the anticipation of this event reflect all across the charts. And we are going to be looking forward to see how participants in this market will be anticipating this event. So we are going to be looking at this also on the charts today to see how we are going to be positioning ourselves, if we are going to be taking any trade at all for today, or we are still going to stay on standby waiting for that signal to happen. So with that being said here, let's dive right into the chart. And as usual, the first commodity we are going to be looking at this morning is the US oil. On the US oil, we had a couple of sell positions yesterday, though price action was quite choppy as we saw this whole situation where price had continued to range within this new structure between the $75.75 area and the $75 level. So let's see what we were looking at yesterday. What was our expectations? What did we see on this chart that insinuated that we sold the US oil during the New York session yesterday? So during the live session, we identified this simple setup where we observed how price action had been caught within this simple structure between the $72.60 level, $76.20 level, and then the $75.75 area. And at this point yesterday, we were looking forward to either a breakout of that channel or a breakdown of the channel for trading opportunity. As you all know, whenever we have this kind of simple flat channel, we want to see price action break out of the resistance line to give us a buy opportunity, or break down the support line here to give us a selling opportunity in this market. And during the live session yesterday, I told you how I took advantage of the sell position after the breakdown of the structure. And one thing we decided here yesterday, especially for those who had missed out on this opportunity, I decided that we are not going to be jumping in front of a moving trade, as we want to see price action evolve into a setup that will give us another chance. And part of what we were looking at yesterday is the potential of price action coming back to retest the $75.75 level. Remember, this was our support line for the week, and we were looking forward to price coming back to retest that structure. And that was exactly what happened here, as we saw multiple retests of the structure, giving us quite a lot of opportunity to be part of a selling move to the downside at that point. And if you are taking advantage of that move, you would have witnessed a 60 to 70 pips move before this whole consolidation phase happened. And so at this point in time, we have a situation where price is quite choppy right now, further emphasizing the indecision in this market. And for those who are taking advantage of that sell position, well done to you guys. And if you still have the sell position running at this point, I will be advising you to move your stop loss and secure that current position at probably your entry point, and let's see how price action will be playing out from this point. So well done once again, and in that regard, we shall be diving right into what to look out for on this chart ahead of the New York session. So the first thing I will be doing right now, before we go into the details of what to look out for, is to scale up into the daily time frame. Let's have an holistic point of view here, as the whole consolidation phase I am seeing here in the last 24 hours is a sign that something interesting is building up behind the scenes, and we want to ensure that we position ourselves in such a way that we can catch whatever direction price action might likely be going for today. So scaling up into the daily time frame here. So this is the daily time frame. Excuse me. So what we were looking at here yesterday, we had this whole structure figured out first of all, acknowledging the fact that price action has been bearish since the month of July last year. And to further emphasize the bearish momentum in this market is this trend line here, after we connected this series of lower highs in this market to give us that result on bearish trend line. And this also confirms how sellers had continued to dictate the pace here in the last 8 months in this market. However, things got a little bit interesting at the beginning of the month of November, as we saw that since then price action has been caught within a range between the $82 mark and the $70 area to give us a level of indecision in this market. And with this whole situation here, you know what we look out for whenever we have a channel like this. We want to see price action break out of the channel to the upside for buying opportunity, or a breakdown to the downside for selling opportunities. But as you can see, we are yet to see a significant breakout retest of structure to confirm a direction at this point, as price action is still trading within that range. Though we had an attempt by the buyers to break out of the structure here at I think the second week of last month, we saw that attempt, but it didn't last long here, as we saw how sellers came in again, respecting that bearish trend line one more time to incite this bearish move that we have been enjoying in this market in the last 2 to 3 weeks at this point. And one thing we also emphasized here during the live session yesterday was the fact that the bearish momentum that we saw that began here might likely be a retracement of the impulsive move to the upside that started in the month of March. So the question we were asking yesterday is, how far will this move go to culminate that retracement phase and probably get us prepared for the second wave of the bullish momentum? And so with that view in mind, we used our Fibonacci retracement tool to project the potential area where the retracement phase might likely end, and at the same time that area will be serving as our potential demand zone to be part of a bullish momentum if we start seeing a reversal pattern around that area. So what we did here was to bring out our Fibonacci retracement tool, then we ran it through the previous impulse leg as you can see here, and we aimed at an area within the 50 and the 78.6% of the impulse leg, which gave us this yellow window you can see here. And one thing we said here is that as long as price action remain within that area, we're still within the profit target for the sellers. And at the same time, if we begin to see buy pressure resume around this area at any point in time during the course of the week, then we might likely be getting ready to buy. And what I said here, let me give you a visual representation of what I'm talking about. So I said price coming into the zone, if we start seeing structures like double bottom structures, buying pressure, signs that sellers are finding it difficult to find lower lows in this market, in this area, then we will have no choice than to get prepared for another wave of bullish momentum. However, things have been quite a little bit bearish since the beginning of this week, as if you scale down to a much more lower time frame, you will begin to see what has been going on here. So I will scale down into the 4 hours time frame. So we saw this whole setup happen on the 4 hours time frame. First of all, we acknowledge the retracement phase which has been happening here in the last 3 weeks. And funny enough, this retracement phase has evolved into an interesting structure in the form of a descending channel after we connected the series of lower highs and lower lows. We have this descending channel figured out here. So it's very interesting that we have a setup that we can actually use to guide our trading activity going forward. Now, with this whole situation we had here, we saw our price action close just right below the $77 level during the course of last week's trading session, just right exactly had the resistant line of that descending channel to share a confluence with a $77 area, which happens to be our key level for the week. Then we also observed this bearish gap. So it gives us a sign that during the course of the weekend, there was some transaction going on which tends towards a bearish bias here. And the week actually started on a bearish note. Now, one thing we observed since in the last 24 hours in this market, despite the fact that we had the week started on a bearish note, we realized that the $75 area had continued to negate the attempt by the sellers to break down that structure, giving us a clue that buyers are present around that area. So right now, as we go into the New York session today, we are going to be including the $75 area, a very strong psychological level that is, considering the round figure of that price, to be part of our parameters to guide our trading activity for today. Now, when we scale down further into the 1 hour time frame, things become a little bit more clearer. So I will zoom right into the current structure. So this is what we have here. And look at what happened. What happened since the beginning of the week. We saw how price action started the week at the $76.20 level, and since then price action has dropped, so it has been bearish actually. But as soon as price got into the $75 area, we saw how that level had been negating the attempt by the sellers to break down that structure. So at this point in time, we will see this as a sign that buyers are present, and there is a likelihood that we could be having a breakout of the resistant line of that descending channel to give us a signal of a bullish momentum this week. So for me to buy the US oil spot for today, I would want to see price action climb back above the $75.75 level, break out of that resistant line of that descending channel we identified on the daily time, on the 4 hours time frame, to be part of this move to the upside. So to prepare for that, we want to have a buy stop order above the $75.75 level, have our stop loss anywhere right around the $75 area, which will be dovetailing to about 60 to 65 pip stop loss there, and let's see how this bullish momentum will go going from that area. And if price action goes on to break out of the $76.20 level, which happens to be the highest point price action has been for this week, then we'll be looking out for more opportunities to add more position to our existing trade. So let's see how this plays out going into the New York session today in terms of a bullish expectation in this market. And remember that we have our key level at the $77 area, which also a breakout of that level will be welcoming more opportunities to buy. And one thing about the key level is this. Remember, we identified the key level here at the $77 area to be serving as our yardstick for trading activities for this week. And that same level had been a demand zone at one point during the mid-month of April. Now, look at this whole situation. You can see how that level is a key determinant of price action, at least in the last 2 to 3 weeks now. It has been a key determinant of price action. It was initially a demand zone before the breakdown of that structure happened mid last week. Now we saw price action came back to retest that structure. So if it so happens that this bullish momentum continues and approaches that $77 area, we want to ensure that we secure all the buy positions we have prior to that moment. Now, it now depends on how price action reacts to the $77 level that will determine if we are going to be adding more buy position or getting ready to sell. So if price action gets into the $77 area and we begin to see selling pressure, probably price action evolves into a reversal pattern like a double top structure or a head and shoulder pattern, then we might likely be in for another wave of bearish momentum to the downside, as this is going to be serving as a very strong selling niche since the breakdown happened last week. But if price action breaks out and buy pressure continues above that level, then we look out for more opportunities to add more position to our existing trade. So that is how we are going to be buying the US oil spot for today. And then there's one more thing here that I was able to spot that we can also use to guide our trading activities going forward. And in fact, it would help us to feel comfortable in whatever position we are in. And that is the trend line that you can see here. So what I did was to connect the series of higher lows, at least since last week's trading session. We have been citing these higher lows here. So ever since price action tested the $74 mark, we have been seeing buy pressure. And since then, price is yet to come back into that structure, hereby giving us a situation that looks more like a higher low. And from a technical standpoint, whenever we see price action evolving, finding higher lows in the market, it is a sign that buyers are gradually gaining some momentum behind the scenes. So what I did here was to connect the series of higher lows to give me this beautiful bullish trend line, which definitely will be serving as our yardstick going forward. And what do I mean by that? So as long as price remain above the trend line, we shall feel comfortable in a buy position here. So like I said, we are looking forward to a breakout of that $75.75 level, which also shares a confluence with a resistant line of the descending channel we identified on the 4 hours time frame. So if that happens, then buy pressure above the structure will be welcoming more buying opportunity in this market. And as long as price remain above that structure, we continue to look out for more patterns that support a trend continuation so that we can add more positions to our existing trade. Now, in as much as we are looking out for buying opportunities in this market, you all know what we do here. We don't want to put all our eggs in one basket. We want to be as dynamic as possible so that we can be part of any move if the market decides to change direction at any time. So in this kind of scenario that we are looking out for buying opportunity here, we cannot ignore the potentials of the sellers in the market. So what do we want to be seeing on this chart that will give us the confidence to sell the US oil for today? Now, since we already have a bullish trend line that we said we are going to be using to guide our trading activity, if at any point in time during the New York session today we have the trend line broken to the downside, then at this point we shall be seeing this as a signal that the trend line may no longer be strong enough to resist the selling pressure. And one interesting thing about this bullish trend line is the fact that it also shares a confluence with that $75 area, which happens to be that buy niche we have identified in the last 24 hours. So you can see how the $75 level, which has been a strong buying niche in the last 24 hours, also shares a confluence with that trend line. So if a breakout of both of the structures happen, then at this point we want to be seeing this as a signal that sellers are gradually gaining momentum. But remember, we are not getting too excited here to join right away, as we want to see some confirmation to happen before we join that sell move. As you can see here, in the past we had situations where price action in fact broke down that structure multiple times before it climbed back to the upside. So we need some confirmation that will give us that evidence that buyers have finally lost it at this point. So what we are going to be looking out for is a retest of structure. Price will come back to do the retest of the $75 level. Mind you, this whole observation is going to be done on a lower time frame, like your 10 minutes, your 5 minutes, or your 50 minutes time frame to look out for this kind of setup. Look out for a retest of the $75 area or the trend line that was broken to the downside. And most importantly, we want to be seeing selling pressures giving us signs that buyers are finding it difficult to climb above. And if this whole setup is formed and mature, then we can now have a sell stop order below the $75 area to be part of the bearish move to the downside. And another caveat to this whole structure here is the $74 area, which happens to be a very strong demand zone. At least during the second half of last week's trading session, we saw how the $74 level had been a strong demand zone in this market. So as soon as price gets into that area, we want to be moving our stop loss to secure all sell position, as we want to wait and see how price action will react to the $74 area to determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy. So if price action breaks down the $74 mark, then at this point we look out for more opportunities to add more position to our existing trade. However, if buy pressure resumes above the $74 level like it did last week, then we will have no choice than to look out for buying opportunity from our lower time frame. So this is how we are going to be trading the US oil spot for today. So we have two setups, two key levels that we are going to be using to guide our trading activity. We have the $75.75 level, which if price action break out of that structure, it would have broken out of the resistance line of that descending channel we identified on the daily time, on the 4 hours time frame, to give us a clue that the resistance line could no longer resist the buy pressure in this market, and that would be a beautiful sign for us to be part of a bullish move. However, if the contrary happens here, price action breaks down the trend line, this bullish trend line we have here, which also shares a confluence with that structure at the $75 mark area, then at this point we want to see this as a momentum shift. And I laid emphasis on this here, that we are not jumping right away, as we still need some confirmation to happen, which we are going to be looking for on a much more lower time frame. Look out for a retest of structure, selling pressures giving us signs that buyers are finding it difficult to climb a new high. Then at this point we can be in for the bearish move. So that is how we are going to be trading the US oil spot for today. If you have any questions, let me know right in the comment section. Lucas 6789 wants me to do something on the gold. Of course, we are going to be doing something on gold. Gold is one of the instruments on our watch list for this week, and definitely we shall be taking on the gold in a couple of moments from now. So try to stay tuned in so that you don't miss out on that session. And good morning to you, Lucas, and trust you are doing well. So in the absence of no questions here, I want to assume that we're on the same page. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So moving on right now, we are going to be talking about the US tech, which is right now on a very, very choppy situation we are witnessing on the US tech. So we shall be talking about this in a moment. Okay. All right, so let me zoom this in so that we can see things more clearly here, and I hope you can see my screen. If you can see my screen, let me know so that I can bold in the old structure better for you to see. So on the US tech, it's quite interesting that price action has been very choppy since the beginning of this week. As you can see here, we have a situation where price is currently consolidating between the 13,290 and that's our key level at a 13,320 to emphasize some level of indecision in this market. And this is not unconnected to the FOMC expectation tomorrow, as majority will definitely want to be looking forward to the Federal Reserve's announcement for tomorrow and what that is going to be like. Well, the general consensus is that we are going to be seeing a 25 basis point rate hike, which will definitely be affecting the US dollar positively. But there is still this whole situation as regarding the banking sector in the US economy, which we all know on Saturday, Sunday, we saw the new development that happened where the First Republic Bank was acquired by JP Morgan, and this is a dent into the US banking sector at the moment. And these are things that the Federal Reserve will also be considering as regards the interest rate decision tomorrow and plans ahead of mitigating against such risk in the future. So with this whole situation here, we need to be very, very careful at this point. So what we saw here during the live session yesterday was quite simple. We had a structure between the 13,290 and the 13,220 area. As you can see here, this is what we actually saw during our live session yesterday. And you know what we look out for whenever price action does this kind of flat channel. We want to see price action either breakout or retest of the structure to give us an opportunity to either buy or sell. Though we had a breakout of structure yesterday during the New York session, we had a breakout retest which actually gave us a sell position yesterday, and currently price action is running in a loss right now. So if you are taking that position, you will see that you are in a loss of about 6 pips right now, which is not that significant actually, but things are not very, very bearish supporting at this particular point in time, based on the fact that if you notice what has been happening here, you will see how the 13,200 level has been a strong buying niche, as every attempt by the sellers to break down the structure since last week Friday has been negated by the buyers. And the same thing also happened here during the New York session yesterday, and even during the early hours of today, we saw how the $13,200 level has been negating the sellers' attempt in this market, giving us a clue that buyers are very, very present at that point. So going into the New York session today, what is going to be our plans here? So we are still running in a loss right now. Are we going to be closing this position manually, or are we going to wait for it to run out into whatever direction it wants to go? Well, we shall be getting an answer to this when we look at the structure from an holistic point of view. So the first thing we are going to be doing before we go into the details of what to look out for today is to scale up into the daily time frame. Let's see things from an holistic point of view. Let's see what it's really looking like around that resistance line we identified at the 3,220 on the daily time frame. So on the daily time frame, it is quite obvious that price action has been bullish, as we have an ascending channel to emphasize the strength of the buyers in this market. And we also saw a breakout of the 12,800 at the beginning of last month's trading session, taking out the sell positions around the 12,800 area. And this was the first time price action would ever break out of that structure in, I think, how many months? About 7 months thereabout. That was the first time price action would break out of that structure. And at the beginning of the month of April, we were thinking that the breakout of that level will incite a very huge bullish momentum, but we were proven wrong by the market, as we saw here how price action had been trapped within a range throughout the whole of the month of April between the 12,800 and the $13,200 mark. Now, with this whole structure that we have here, there is a high chance that this whole setup could turn out to be a trend continuation pattern if we consider the impulsive move that brought us to this point. So if we consider the impulsive move that brought us to this point, you will see that we had an impulse leg earlier in the month of March that brought us to this level, and since then price action has been caught within a consolidation phase, which has a tendency of transitioning into a trend continuation pattern only if price action breaks out, retests the resistant line of this channel to incite that move. That is the only way we can be looking out for a trend continuation pattern. However, this whole setup can also tend towards a reversal pattern if price action breaks down the support line here to incite a sell-off. But with the recent activities in the last couple of days, you can see our price action has been trading right around that resistant line in the last 3 to 4 days. And this is a sign that we are at a critical point in the market where, though we had a little breakout of the structure on Friday of last week, but it appears that buyers are still struggling around that area to find their ground to gather some momentum to push price further to the upside. And from the look of things yesterday, it appears that sellers are gaining some momentum gradually, but around that area there's still some tussle between the buyers and sellers. So there's a level of indecision around that resistant line, which is could be as a result of the anticipation of the FOMC coming up tomorrow. Now that we have this all information figured out on the daily time frame, price action is currently within the resistant line at the 13,220. Let's scale back down into the lower time frame to make a decision as regards to how price action has been consolidating here in the last 24 hours. So when we scale back down into the 1 hour time frame, and now with the information we have gathered on the daily time frame, let's have a relook at what is really going on here. So if I zoom out of this whole structure and look at what is happening, so since the beginning of the week, since yesterday, we have been seeing some selling pressure. Price action have been finding lower highs in this market, and to emphasize that, what I did was to connect the series of lower highs here, which has given me this bearish trend line that you can see on your screen. Though price has not found lower lows here, despite the lower highs, we are yet to see lower lows, which is a sign that this whole area could be a platform for another bullish momentum. So I would like to label this area a temporary demand zone in the meantime. Temporary demand zone. So this area here will be, hold on a second, I would like to place this right inside the box and then give this a darker color, a darker shade. All right, so here we have a temporary zone here right now. As you can see, it is quite obvious that sellers are finding it difficult to break through that level. So with this whole situation we have here, there is a high chance that buyers could finally come in to break out of the 13,290 to set the tone for another bullish wave for the later part of the week. However, we could still find a way around taking advantage of that bullish move even before the breakout of the 13,290 happens. And now, how do we intend to take advantage of this? Well, first of all, I would like to acknowledge the fact that we have a resistant line here since the early hours of today at around the 13,250, exactly at the 13,250, the psychological level. Let's label that out. Okay, place at the top right hand side of our screen. Beautiful. So I would like to reduce the front. Let's just give it a 10. Okay. So we have the 13,250 here. So what I want to see here is a breakout of the 13,250 to be able to join that bullish momentum even before the breakout of the 13,290 happens. Now, why are we doing that? Now, if you look at this whole structure here, remember I said earlier that we have this bearish trend line after connecting the series of lower highs. So if a breakout of the 13,250 happens, then price action would have broken out of that trend line to give us a sign that the trend line may no longer have the capacity to resist buy pressure. But remember, we are not getting too excited here. Remember, we are still within a channel, so we will need some confirmation to happen. And that will come in the form of a retest of structure. And when we are looking for this confirmation, we want to scale down to a much more lower time frame, like our 10, 5, or 15 minutes time frame to look out for this retest of structure. So it could be the retest of the 13,250 or the retest of the trend line here. But most importantly, we want to see patterns that support buying pressure to join that move. Then when we join the move around that area, then we could actually now have a buy stop order above the 13,290 to be part of another wave to the upside. So that is how we are going to be trading this for today. And personally, I'll just tell you, if you are still in that sell position right now, I would advise that you just close that trade manually now with about minus 7 pips stop, minus 7 pips loss around that area, which is better to close as we are sitting right on a strong demand zone, and it doesn't make any sense selling this instrument right on a very strong demand zone here. So now that we are looking out for buying opportunity at this point, we should also consider the potentials of sellers too as well. As you all know, we have been on a very strong bullish momentum in the last couple of weeks. Hold on a second, let me scale up into the 4 hours time frame so that we can see things more clearly here. So if you look at the 4 hours time frame here, you will see that we had an impulsive move that started from the 12,800 level into the structure, and since price got into this level, we have been witnessing this whole consolidation phase, which has a tendency of transition into a trend continuation pattern if a breakout of that trend line happens, and it could transition into a reversal pattern if a breakdown of that demand zone happens, hereby inciting a retracement of that impulsive move to the upside. So if I want to be selling this one today, I would rather wait for price action to drop and break down that temporary demand zone, or possibly break down the 13,220. So right below the 13,220, I could have a sell stop order around that area, and if a retest of structure happens with sudden pressure, then I will be in to add more position to my existing trade. TP target for the sell position here will fall around the golden zone area of that impulsive move. So when we bring our Fibonacci retracement to run it through the previous impulse leg, we should be aiming at that area between the 50 and the 78.6% area for our TP target. So TP target for sellers here, and the same zone will also be serving as a potential demand zone if we begin to see buy pressure resume from that area to incite the second wave of the bullish momentum that started last week. So this is what we are going to be looking at on this one. So if a breakdown of the 13,200 happens, we look out for selling opportunities, and if a breakout of that structure we identified at 13,250 happens, we look out for buying opportunities. So let's remain patient here and wait for price action to give us that signal, and within the next 2 to 3 hours we should be able to get an insight into where price action is likely going to be going. So at this point, I delete this one. So we are looking forward to a breakdown of the 13,200 for selling opportunities, and a breakout of the 13,250 for buying opportunities. So that is that on the US tech for today. If you have any questions, let me know right in the comment section. So moving on right now, I'm going to be talking about the GBPUSD. And on the GBPUSD, we have been selling the GBPUSD since yesterday. And at this point in time, we are very, very profitable on this pair. So we had a first position triggered yesterday. I showed you here Okay, let me run through what we were looking at yesterday for the sake of those who are not part of the live session. So at the beginning of the week, we identified a setup, a very simple one, where price action was trading. We had a resistance line around the 1.2570 area, as we saw buyers were finding it difficult to even break out of that level. Then we had a support line of that channel at around the 1.25420 area, as you can see here. We had the support line of that channel. And then what we normally do whenever we have this kind of flat channel is to wait for price action to either break out of the resistance line for buying opportunity or a breakdown of the support line for selling opportunity. And I told you yesterday that I already had a sell position running, and this was where we were during the live session yesterday. And I told us all that we want to remain patient at this point to wait for a retest of structure to be part of that move. That is for those who had missed out on that initial move around that area. Price action came back just as expected, respected the trend line one more time, and then we saw this impulsive move all the way to the downside. And in the last 24 hours here, we have a sell position that has moved over, let's see, from the entry point here to this present moment, over 75 pips in profit at this point. And remember, yesterday also we had the privilege of being part of another sell position when we had a sell stop order below the key level, had a 1.2500 area. And if you had also taken advantage of that breakdown of the key level, this one is running with about 35 pips in profit. So we have a total of over 100 pips in profit right now. And you know what we do whenever we have this kind of simple setup. We want to ensure that we secure all our sell positions by moving our stop loss accordingly to lock in this profit. And the most appropriate area to lock in this profit at this point is somewhere anywhere just right around or above the 1.24840, so that we can give room for price action to breed. So now that we have locked in your profit at this point, what is going to be our next line of action for today? Now, let me quickly run through the 4 hours time frame here, and let's us refresh our memories regarding what we identified on the 4 hours time frame. Now, look at the structure here on the 4 hours time frame. The first thing we did on the 4 hours time frame was to acknowledge the fact that price action has been bullish since the month of March. And to emphasize this, we connected a series of higher lows in this market, which has given us this bullish trend line that you can see on your screen right now. As you can see, price has consistently respected that trend line, giving us a confirmation that buyers are very strong in this market. But one interesting thing happened since the beginning of the month of April, as we saw how our key level had a 1.2500 level made it difficult for buyers to find a new high. So throughout the month of April, we saw how sellers continue to negate the bullish attempt in this market. So as soon as price gets into the 1.25, we saw how sellers negated the bullish attempt to push price further to the downside. But the inability of price action to find lower lows gave more momentum to the buyers, and this led to the breakout of that resistance line on the final trading day of last month. So we saw the breakout of this trend line, which gave us this this engulfing bullish candle to the upside, testing the 1.25850 area here. And one peculiar thing about this engulfing candle is the fact that it broke out of two key structures. One is the key level at the 1.255, and the other one is this bearish trend line that we have here. And you all know from a technical standpoint, whenever price action breaks out of a key structure like this, we expect at one point in time price action will come back and do a retest of that structure. And it appears things are falling in that perspective. As you can see here, we have been witnessing some consolidation phase around the retest of especially the trend line here, and we might likely be seeing a trend continuation to the upside. Or we could have a situation where price goes to drop further into the trend line here to inside another wave of bullish momentum. And remember, yesterday I told us all that our sell position on the GBPUSD, the TP target of that sell position is going to be falling just right around that trend line, where it now bit depends on what happens here. That will determine if we are going to be adding more sell position to our existing trade, and if the opposite happens here, buy pressure resumes here, then we get ready to buy. Now, with this information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame to see how the price action has been reacting to the structure. So right now we have the breakdown of a new key level I was able to identify this morning at the 1.24840. So we had the breakdown of the structure here. I had a sell position running at this point. If you took it, well done to you for being on standby to take that one. But at this point in time, we want to see how far will this move go. Will it get to the trend line here, where we'll start seeing buy pressure around the 1.24500 area to incite another wave of bullish momentum, or are we going to be seeing a breakdown of that structure to incite a sell-off in this market? So I would like to acknowledge the 1.2450 level here, so that we can keep it in mind while we so we have the 1.245. So let me label that area. So 1.24500, so that is that there. So we are going to be looking forward to either a breakdown retest to sell, or buy pressure to buy here. So that is a very important key level we are looking forward to going into the New York session today. So let's keep this in mind. If you still have a sell position running, move your stop loss to secure your current sell position as we wait and see how price action will be reacting to the 1.245 for more opportunities to either sell or buy the GBPUSD. Now, for those who had missed out on this opportunity here, there is still a chance that price could still come back and retest that structure to incite another wave. So if we see anything like this during the New York session, where price action comes back into the 1.24840, then we scale down to our 10, 5 or 15 minutes time frame to look out for selling pressure to join that move. A further breakdown of the 1.245 will welcome more opportunities to sell. Now, if price action does not drop to the downside anymore, and instead it continues to climb higher heights, then at this point I want to be looking out for buying opportunity if we at any point in time sight a reversal pattern, probably like a double bottom structure, then we could join that move to the upside. So these are hello, sorry about that. So these are the things I want to be looking at as we head into the New York session today. Then one other thing I would like to state here is that if price action breaks out to retest the 1.250 level, which happens to be our key level, then we'll be looking out for buying opportunity above that area. And remember, we have a trend line here which has been respected since the beginning of this week, as you can see here. So that trend line also shares a confluence with our key level at the 1.2500 area. So if at any point in time price action breaks out of that structure, we'll look out for buying opportunity above that level to join a trend continuation to the upside. So let's keep this in mind. Screenshot my screen so that you can use that as a reference point when you're about to make your individual decision. So if you have any question, let me know in the comment section while I move on to the next pair. So the next pair I shall be looking at this morning is the XAUUSD. And on the XAUUSD, it has been a choppy situation here on the XAUUSD actually. And this is what we were seeing here yesterday. Let's run through what our expectations were. We had some profits taken on this one too. We shall be looking at in a moment. So the first thing we did here yesterday was to acknowledge price action started the week at around the 1,992. So it was on a bearish note that the week started here. And then as soon as price got into the 1,980, we begin to see buy pressure resume around that area. And one other thing that we acknowledged here yesterday was the fact that price action is sitting right on a very strong demand zone, which makes a whole lot of sense that we look out for buying opportunity in this market. And because of this whole situation that price action is sitting on a very strong demand zone, we decided here yesterday that we are going to be having a buy stop order above that key level at the 1,990 to be part of a potential bullish move to the upside. And we also said here that if price action breaks out of the 1,990, it would have broken out of that trend line that we identified on the 4 hours time frame. And luckily enough for us, prior to I think during the ISM manufacturing PMI data yesterday, we saw this breakout of the 1,990 and price action moved about 160 pips in our favor before the bearish move came to the downside. And I hope you did move your stop loss accordingly to lock in some profit here, as you would have taken in some profit, or at worst case scenario break even if you moved your stop loss to entry point. So that is how we traded the XAUUSD yesterday. And one interesting thing about this whole structure is the fact that price action is back into the support line we identified at the beginning of the week at the 1,980. And since price action came into that structure, let me show you the structure. It is here. At the 1,980, we have seen that in the last 18 to 24 hours, price action had continued to find buy pressure around that area, and sellers are finding it very difficult to break through that structure. And like I emphasized here yesterday, I told us all that as long as price action remains above this demand zone, it will make a whole lot of sense to look out for more buying opportunity in this market. Now, I was able to now identify a simple setup that I think we can use to guide our trading activity for today. And I think I shared this on my public platform. And we said here, hold on a second, I think I did that on the 15 minutes time frame, which I will be showing you in a moment. So here we are on the 15 minutes time frame, and this was what I was able to spot here after that impulsive bearish leg to the downside. So we saw here in the last 18 hours thereabout, we saw our price action has been consolidating, which I emphasized on the 1 hour time frame earlier. And with this whole situation, you know what we look out for when price action gets into this kind of simple channel. We want to see price action either break out of the channel to give us a buy opportunity, or break down the channel for a selling opportunity. And in this case scenario here, I had a breakout of the structure which triggered my buy position. And for those who took advantage of this opportunity, well done to you for being on standby, as you will currently be running with about 30 pips in profit at this point. And for those who had missed out on this opportunity, there's no cause for alarm, as there is still a chance that price action could still come back and do a retest of that structure before the second wave of that breakout happen. Now, in order to guide our trading activity for today, what I did here was to acknowledge the fact that price action has been bullish since the beginning of this week. And what I did was to connect the series of higher lows. As you can see, we've been witnessing some higher lows since yesterday. So when we connected it, we have a bullish trend line. And now that bullish trend line you see on your screen right now is going to be our yardstick to guide trading activity for today. So at any point in time, price might still come back into the structure. So if we start seeing certain pressure come in, we don't need to be worried or fearful that we might be taken out. So as long as price action remains above that trend line, we are going to be holding on to a bullish bias in this market. So that is how we are going to be looking out for more buying opportunities. Then another structure, there's another structure here that we can also use to add more position to our existing trade, and that is going to be around this area at the 1,009, I think 1,990 is it? Let me just choose a psychological level there. 1,990, I guess. So we have a structure there at the 1,990 where a breakout retest of that structure too as well will welcome more buying opportunities in this market. So let's label this area, and then we are looking forward to more opportunities to buy if price action ever breaks out of that level. So let's keep this in mind. The trend line we have here will continue to guide our bullish momentum. As long as price remain above that structure, we look out for buying opportunity. But if at any point in time price drops below the trend line, then at this point we want to be seeing this as a signal that sellers are gradually coming in, but I doubt if that will happen. But if it does happen, we want to be on standby to catch that move. So breakdown, retest, remember, whenever the breakdown happens, we are not joining right away. We want to see some confirmation to happen, which is going to come in the form of a retest of the trend line. When it is broken, then we had more position, had the breakdown of the 1,980. So that is how we are going to be trading the XAUUSD today. So we are holding on to our bullish buyers and looking out for more opportunities at the breakout of the 1,990. So let's see how this plays out, and by tomorrow we shall be coming back here to review how well this pair has been doing. So moving on right now is into our last pair for today, which is the USDJPY. And on the USDJPY, we have been quite profitable on this pair so far. So good this week. Remember, at the beginning of the week, we identified this simple flat channel where we acknowledged the fact that price action started the week on a very strong bullish note, as we saw the support line at the 136.200 serve as a platform for buying pressure in this market. Then we also had a resistance line for the channel at the 136.700, where I told us all that we shall be having a buy stop order above the resistance line here to be part of a bullish momentum to the upside. And luckily enough for us, we had this whole situation figured out here, and price action is currently running with about 60 pips in profit. So for those who are taking advantage of this opportunity, well done to you for being on standby to have caught that move. So right now, you know what we do whenever price action moves in our favor like this. We want to secure the current position, and like, let me tell you here that anywhere above the 137.300 area seems most appropriate to secure this current position. And the reason why that is, you can see we have this level has been serving as some buying niche at one point. You can see what happened here. We saw buy pressure here. We have seen buy pressure here in the last couple of hours. So we shall be labeling this area as the 137.300. So anywhere above that structure seems, or around that structure seems appropriate to secure the current buy position in this market. So I would like to give this a different color. I would like to give this a green color instead. Okay. So we have the 137.300 level as a bottom line for buying pressure this week. And another thing that we also were using to guide our trading activity yesterday was this bullish trend line. Remember that we connected the series of higher lows in this market, giving us this trend line that you can see on your screen. And since the beginning of this week, price has consistently respected that trend line, giving us a sign that the trend line still seems very strong to negate any bearish pressure in this market. So in the last couple of hours right now, price action is still trading right around that trend line at this point. So going into the New York session today, we are going to be using this trend line as our yardstick for trading activity. So as long as price remain above the trend line, we feel comfortable in our buy position while we look out for more opportunities to add to our existing trade. And at this point in time, I have a buy stop order above the 137.780. So if a breakout of this structure happens, then we want to be in for another wave of bullish momentum. So that is how we are going to be adding more position to our existing trade. And for those who are already in a buy position, I have told us all, let's secure this current position, move our stop loss accordingly while we continue to monitor price action. Now, in as much as we are looking out for buying opportunity in this market, we cannot ignore the potentials of sellers too as well. Remember, we had a breakout of a key structure here at the beginning of the week at around the 136.700, and we all know that from a technical standpoint, that price is still likely going to come back to do a retest of that structure. If that is going to be the case, that is come back to do the retest of the 136.700 to incite a trend continuation, or probably drop below the structure to incite a sell-off in this market. So with the potential of sellers coming in at this point, we want to consider selling momentum too as well. Now, in this kind of situation and from this current structure, what do we want to see on this market that will give us the confidence to be part of a bearish move? Now, with this whole situation, first of all, the trend line I said here is going to be our guide. So as soon as the trend line is breached, then that is a sign that we might likely be seeing a momentum shift. So a breakdown of this trend line at any point in time during the New York session today is going to be red flag that we might be seeing a sell-off in this market. And one thing I want to see here following the breakdown of the trend line is a retest of the trend line, or the retest of the 137.350 level, which I was able to identify here to support any bearish move to the downside from this level. So if selling pressure resumes below the structure, that is, buyers find it difficult to climb back above the 137.530 right on our lower time frame, then we might be in for a sell move. So you could have a sell stop order below the 137.300, or if you have a reversal pattern and a neckline right below that structure on our lower time frame, then we could be in to join early enough. But if that is going to be the case, let's see how this is going to play out. And one thing I want to say about this sell move is that this is a counter trend opportunity and might likely be a retracement of the impulsive move that started last week. Now, talking about the impulse leg here, let's scale up a little bit into the 4 hours time frame so that you can see what I'm talking about here. So last week we saw our price action started a bullish momentum from the 134.00 level, breaking out key structures like the 135 and the 137.00 area. And if you look at this old structure here, especially for those who are taking advantage of this move here, majority who had bought the USDJPY at a very cheap price will at one point in time want to be doing some profit taking activity, which would reflect on the chart as a retracement phase into a key structure before another wave of bullish momentum will happen. So if this is going to be the case here, if we bring out our Fibonacci retracement tool so that we can project where the retracement phase might likely end if price action continue to find bearish momentum, then we shall be aiming. Hold on a second, let me just copy this one from the GBPUSD chart here, I guess. Where was that? Where did we get? Okay, I think this one. I'll just copy this one from here, and then let me place it right inside this place. Okay, beautiful. So we have a TP target zone for sellers between the 135.550 and the 134.300 area as a TP target for sellers here, and at the same time that area will be serving as a potential demand zone if we start seeing buy pressure resume from that area. So that is how we are going to be selling if price action breaks down the key structure that we identified here on the 1 hour time frame. So let's go back to the 1 hour time frame and look at this closely. So we already have price action trading below the trend line right now, and we are 5 minutes in. So let's scale down to a 15 minutes time frame to see what the structure is looking like around that area. So beautiful. So we have a structure here right now, and okay, so below the 137.350 seems most appropriate to be looking out for selling opportunities. And as soon as price gets into the 137.00 area, we look out to see how price action reacts to the structure. So you move your stop loss accordingly, lock in some profit. Let's wait and see how price action reacts to the 137.00 area. If a breakdown retest happens, we had more sell position to our existing trade, and if instead price action continues to find buy pressure above the 137.00 area, we look out for buying opportunities in this market. So let's be on standby for this one so that we can be part of that move as price action goes to the downside. So we have our sell stop or stop loss on the buy position placed already. So if we are taking out of the sells of the stop of the buy position, there's a high chance that the sales position will be triggered at this point. So it's on this note I want to call it a day here. It has been a wonderful moment with you guys, and I'm very confident that we are all equipped to be able to take advantage of any potential trading opportunity during the New York session, as I've been able to simulate all the potential or possible setups that price action could evolve into during the New York session today. So my advice is that let's remain patient, wait for structures to mature so that we can take the move at the right and appropriate time. On this note, I wish you best of luck today, and for the newcomers in the house, I hope you are able to learn one or two things today, and rest assured that the more time you spend with us, the better you get at assimilating what we are talking about, and the more independent you will become to be able to make your own individual decision using the information you have gathered here. Do have a wonderful evening, everyone. Bye bye.